Alright, my fellow investors, welcome back to the channel. In today's video, I'm going to be going over my top 5 ETF and stocks to buy and hold for how long? Forever, guys. Alright, so kicking off the list is SDY. So Spider Sp Dividend Etf. Alright, so currently sitting at 124.55. This one here has a whopping 2.3% dividend yield after expenses. Alright, so it has an expense ratio of 0.35%. The inception date on this ETF is November of 2005. Performance so far, yearly total 20%. Year to date, 1 year 32%. 3-year rate of return 12.53%, guys. Alright, so those are excellent returns. These are some of the top holdings within this ETF. There are several more if you guys want to do your research on those. I just want to go over them briefly. The reason why it has a high dividend yield is because all these companies within the holding offer a major dividend, all right? However, after you average out all their dividends, it comes out to 2.65, and after expenses, 2.3, all right, guys? All right, the next ETF on the list is VYM, all right? One of my favorites as well. Vanguard High Dividend Yield Index Fund ETF. So basically this one here has a whopping 2.79% dividend yield. Alright, guys, with a measly 0.06% expense ratio. Alright, so that's relatively nothing. So after you deduct the expense ratio, you're left with a 2.73% rate of return on your money. That means for every $100 you put in there, you're going to be getting $2.73 back in dividends. Alright, so the inception date on this one is November 10, 2006. Performance so far, year to date, is 19%. 1 year is 33%, and 3-year average is 11.68%. Alright, guys, so the top holdings on this one are JP Morgan, Johnson Johnson, the Home Depot, Procter Gamble, Bank of America. As you guys can start seeing, some of these stocks are going to be repeated within the holdings because these are major stocks that offer high dividend yields. Alright, so there's way more holdings on there. You can do your research on them. However, I just want to provide you with the highest dividend yield ETFs, some broad information on them. Remember, before you make any type of investment, you should go out there and do your own research. I just want to provide you with the highest yielding ones so far and the safest ones. Alright, next on the list is HDV. Alright, so iShares Core High Dividend ETF, currently sitting at 97.21. Alright, this one has a whopping 3.59% dividend yield, guys. All right, minus the expense ratio 0.08, you're left with a 3.51% dividend yield, meaning for every $100 you put into this ETF, you're getting $3.51 in return. All right, not too shabby. All right, the inception date on this one is March 29, 2011, so it's been around, all right, through a couple of crashes, especially the coronavirus crash, and then the major sell-off in 2018 as well with the Trump tariffs. Alright, guys, so daily total return so far, year to date, it's up 13.73. Remember, this is excluding dividends, okay? So for 1 year, it's up 19.39%, and the 3-year average 7.7, which is almost what the market gives you, between 7 to 10%. Alright, these are some of the top holdings. As you guys can start seeing, some of these holdings are within other ETFs because they're major players, especially in the dividend realm. Alright, so next on the list is the Coca-Cola Company, so another fan favorite here, not just of my own, but of one of the most famous investors of all time, Warren Buffett. Alright, this stock has contributed to millions of dollars worth of dividends. Alright, plus stock appreciation. Alright, because he got in at very low prices. Alright, so Coca-Cola Company currently sitting at $56.69. This is a great buy right here, guys, because it's going to show consistent growth over time, plus increasing its dividend over time as well. So its current dividend yield is at 2.96, offering $1.68 per share. All right, its 1-year target estimate is $62.02. Alright, as you guys can see here, since this is just a single stock, there is no expense ratio and there's no holdings because it's just a single company. All right, guys. Like I said, great buy here, so you can't go wrong with this company. All right, last but not least, and remember, guys, these aren't in any particular order. They just happen to come up like this, and I was ready to inform you about them in this order that I selected. However, there's no rating in which one's my favorite. However, I do have a personal bias towards realty income because it's tied to real estate. All right, and real estate is how I got my investing journey started. All right, so that's why I have a little bias towards this one here, and one of my personal favorites because it pays on a monthly basis. All right, because it's real estate. That's how you want your real estate to pay you, and that's how you want your cash flow. You want your money to produce you money on a frequent basis. This one offers a monster dividend yield of 3.91%. See here, this one doesn't have an expense ratio as well because it's a single company. It offers a $2.83 per share dividend. All right, guys. So its 1 year target estimate is $77.94. You guys can see here, it's still off of its all-time high, which was $84.92 prior to the coronavirus crash. All right, so there's still room to run in this stock, and in the meantime, while you wait for your asset to appreciate in value, you're gonna be collecting that consistent dividend, so that cash flow in the meantime while the stock goes back to all-time high and even beyond that. And the consistency in dividends creates the compound effect because your dividends, especially if you reinvest those dividends, it compounds over time. So now your interest is earning you interest, all right? And that's what you want over time, which is a very powerful wealth generating tool, all right, guys? All right, here are some other notable candidates that just missed the top 5 list. Is Verizon, all right? So currently sitting at $54.94. This one also offers a nice dividend, so actually higher than all the other ones at a 4.56% dividend yield. All right, that's $2.51 per share. So if you were to deposit $100 into this company, it would be netting you $4.56 per $100 invested into this company. All right, its 1 year target is $60.30. You notice here, this one's not an ETF as well, so it doesn't have an expense ratio. So, all right, guys, in terms of dividend and the payout, this one's a fairly consistent stock as well. You see here, it's off of its all-time high. However, in the meantime, while you wait, like I said, for your assets to appreciate in value, you're going to be collecting that consistent dividend, and that's what you want, all right? Because it compounds over time, allows you to purchase more of the same company, which will in terms also appreciate the new shares that you purchased, and also collect you more dividends on the next dividend payout. All right, and here's another one that just missed the list. So Johnson & Johnson, currently sitting at $173.74. Another love or hate stock here. However, currently offers a 2.5% dividend yield, which is $4.24 per share. Meaning that for every $100 you invest into this one, you're going to be getting $2.45 per every 100. All right, it's got a 1 year target of $189.61. So, not a bad deal, guys. Plus, Johnson & Johnson is part of the list of the consistent dividend growers, meaning that over time, over the last 20 years, it's consistently increased its dividend, plus appreciating in price, guys. Alright, I hope you guys liked this video. If you guys liked the video, go ahead and hit the like button for the YouTube algorithm. That way we can share our information with as many investors as possible. And go ahead and subscribe to the channel if you guys want to follow me on my journey to create financial freedom. Hopefully I can provide you with some tips and strategies so you guys can go ahead and create financial freedom for yourself and your families and friends. Alright, hope you like this content and catch you on the next video.